Okay, so today we'll be looking at understanding the basic investment terms. So, but because we do not really have a novice, as in you have idea of some of the term before, so I may rush through them, then we will discuss. So we have dividends and market capitalization. You already have idea of what those meant, right, sir?
Yes, yes, go ahead. I want to learn. I'm a student, sir. Whenever I come here, I want to
Okay,
learn
okay,
anything.
all right. Okay, so dividend, as in that's a portion of the company profit paid to shareholders. Then the evaluation, the company distribute portion of their earning to reward shareholders. So dividend basically, the company is just paying the shareholder a portion of the profit that they made, either quarterly or monthly. But most of the company pay dividend quarterly, but some do pay monthly. And we also look at market capitalization. That is the total dollar value of the company. How do we calculate that? You multiply, that's what it said. You multiply the total number of shares by the current market price. So for example, if Amazon is $100 today, and they have 10 shares. So you just multiply 10 by 100, that will give us 1,000. That's the capitalization of the company or of the stock that we're looking at, total number of a total number of shares multiplied by the current price. So it's gonna vary from time to time. So it's the number of shares multiplied by the current price. The next thing we'll be looking at is P and E. That's price to earning ratio. So this one we use it to compare companies. Now okay, let me run through this slide. We'll go to Finviz to look at a company, for example. So explanation of P/E ratio, when we are evaluating a company, you want to see the price compared to their earning. Their earning is like a quarterly report they will make to investors, how the company is doing, how much they are making. So when you compare it, the price, that means the current price of that stock divided by the earning, we give an idea of how well the company is doing compared to others. So it said a higher PE ratio suggests to investor that is, they should expect future higher earning growth. A lower PE ratio may indicate the value of stock or potential is undervaluation. All right, so looking at this PE, let's give an example. Stop sharing this. And I'm going to share my screen now to give an example of what is your price earning is like. All right, so on my screen, we're going to So do you have a company in mind that we can we can look at?
Let's look at Rivian.
Say that again.
Let's look at RIVN.
R, reading.
Yeah, Rivian.
Okay.
RIVN. No, no, RIVN. The quote is RIVN.
RIE.
V for Victor. R for Romeo, I for India, V for Victor,
Uh,
and N for Nancy.
Rivian.
Yeah, Rivian.
Okay. All right, so looking at Rivian, first it tells us that it's an
Can you hold on
automotive.
a second? Can you take the ad? There's an ad that is obstructing the view. There's an ad. No, no. When you scroll up, no, scroll down. And is it up? The
The
safety.
safety thing.
Yes. Is it possible to X down to now?
Okay.
Or move it there. X down. Yes. Good.
Okay.
Thank you.
All right, I've removed it. All right, so Rivian Automotive Incorporated. Now we want to look at the P. That's this is the chart, but today we're looking at the PE. So this is the PE. Okay. But unfortunately, this one doesn't give us the PE. So sometimes they don't calculate if they are not able to do based on how the company is doing. So let's look at another one. All right, so should we do Tesla or GM?
Can
Yeah,
we do
Jim.
SOL? Oh,
I'm sorry.
okay. Okay,
No,
go ahead.
Go
no,
ahead.
anyone.
The SOL.
Say that again.
SOL.
Okay.
Sierra Oscar Lima.
SOL.
Yes, sir.
That's a Marine Group Limited.
It's an AV kind of stock as well.
That's Sierra Oscar Lima.
Yes, sir.
Okay. All right, so SM Marine, so this technology under solar.
Yes, sir. Yes, sir.
Okay. Anyway. All right, so this one too doesn't have a P, but they give a forward P. So forward P is the future earning that they are expecting. So future is 5.76.
Okay.
The meaning of that is the current price here, the current price divided by the earning. That's this EPS is their earning. That's 34 cents. Divide 6.59 divided by 0.34 will give us the PE. But in this case, they didn't calculate it. So meaning this company probably, as in the people that do this, they may not have enough information, but they give us the future. So let's go with NVIDIA then.
Okay, sir.
NVD. All right, so NVIDIA. All right, so the P/E is $53. 0.31 cent. Then the forward is telling us that in the future, like next year or the next quarter. So if the future is lower than this current, that's a good thing, because we expect a good company to be growing their earning. That means for their earning to keep growing. So if the future is lower than what is current, is a good thing. As any company that the future growth, the future P&E is lower than the current, is a good thing, because you expect the company to be growing.
Okay.
All right. Okay. All right, let's go back to, we'll run through all this definition, the bull market.
Could you look at the, I know you want to move on, sir.
Okay, go ahead.
NRDE
Okay.
symbol, yeah, NR, November, Romeo, Delta, Echo.
November, Romeo, Delta,
Echo.
November, Romeo,
Delta, Echo.
November, Romeo, Delta, Echo.
Yes, sir.
Okay, so it means that it's not listed on this. NRD is not listed.
Yeah. I actually deliberately want to ask that question because
Okay.
they used to be listed, but they actually went bankrupt.
Okay.
And I still have it, and it's actually categorized as a class A now.
Okay.
Yeah, but I
Yeah,
want to
so if I
see
tap
there's
it there, if
performance.
it's not showing, that means no more listed. It could be a private company, but it's not something that we can buy
Okay.
from the public market.
Okay. Okay.
So is it okay to stop and we'll go back to the slide?
Yes, sir.
Okay.
If that's okay. Yeah.
All right. Okay, so we're talking about basic terms. We're talking about dividend, market capitalization. That's the dividend, what the company pay from their earning. Capitalization is how big the company is. We get that by, we multiply the total outstanding share by the price. Then we talk about PE. Now, but the usefulness of P is for you to check how good that company is, that is the price they are selling, and how much they are making on each share. So a lower P is a good thing. So if you have P that is 10, that company is better than the P/E that is 15. It means that every $10 that you spend in that company is making $1. That's the meaning of PE of 10. Every $10 that you invest in the company is making $1. But if there is a PE of 15, then it's every $15 that company is making only $1. But according to Warren Buffett, usually a good company should have a P of less than 25. But that's not applicable to every company. As a company, they describe as growth company, like Amazon, Nvidia, Facebook. Those one, their P is higher because they are technology company. As in the way they grow is different from regular, it's different from other companies. So that one, we may not be able to get a P of less than 25, as in for those growth companies, but they are still good company. So that of 20, P of 25 is not really applicable to those kind of companies. Do we have any question?
No, sir.
Okay. All right, so we talk about bull and bear, bear market. So anybody have idea of what a bull market is?
Yeah, I think this is just talking about the nature of the investment that one has, the aggressiveness of a company, and what's it called? The level of culture, consciousness of the company in terms of investment. Yeah, I'm not trying to go with the definition written right here, but I'm just basing it on paraphrasing my view of or the idea of a bull market and a bear market.
Okay, and that's good. So but basically when we say bull market, meaning we're expecting things to be going up.
Mm-hmm.
When we say bear market, we're expecting prices to start going down.
Mm-hmm.
So but sometimes some group of people are bullish, meaning they expect that stock market will continue to grow, to go up, while some people think that the stock market will start going down. So as in we could have both at the same time, depends. Some group of people will be bullish, meaning they believe, oh, this thing is going up. So some people already predicted that the stock market will reach 6,500 by next year. It's at 6,000 now. But some people think that it's going to go down by like 30%. So, all kind of views. So, but nobody can actually predict the market. Everybody as in they're just forming their own opinion. Nobody can actually predict, but people give their own opinion, their suggestion, what they think. So, but the best way is, as in you listen to what they say, but you to stay out to form your own opinion when it comes to what direction we think the market will be going. So bull meaning we think the market will be going up. Bear market meaning recession, that is the market will be. So based on this definition, it's a period of sustained price increase in the stock market. So the characteristic investor optimism, economic growth, and rising stock market prices. So based on what is happening from the beginning of this year to now, what kind of market will we say we are in now? As in, based on what have been happening from the beginning of this year till now, what kind of market are we going to say we are in?
The bull market, sir.
Okay. Why?
And the long-term view is the market is value of the market is going up, the sentiment is going up, everything is going up at least to certain points.
All right. Any other opinion or idea or thought?
Well, there's no middle ground based on the definition right here, but I will just say the market is culturally going up, but at the same time, I'm in the same lane with Brad Daly, but at the same time, it's not as bullish as the definition actually stated right here. So I don't know if there's any other time.
No, those are just two. So as in when some people are bullish, as in when some people think that the market is going up, some people at the same time they could think that the market will be going down. So, but based on this definition, but I'm just saying what has happened from January till now, we will say is bullish. That means the stock market has grown from about 4,000 something up to 6,000. So that's growth. As in we began this year around 4,000, but the S&P now is now 6,000. So that's bullish market, bullish from January till now. But what will happen tomorrow is what we don't know. Everybody speculate, but I do read what they say, but at the end of the day, you have to form your own opinion. Then you make your decision based on that. All right, so next slide. Come on. All right, we'll look at volatility, volatility, or whatever. All right, let's leave that alone. So but when we say something is volatile, it means that the degree of price fluctuation in the stock market or the overall market. So sometimes as in some stock, they are very volatile. That is, the prices changes very frequently. So do you have any example of a company that you have seen the prices going up very rapidly of recent?
Oh, Tesla is one of them like that.
Okay, that's good. So Tesla went from like 220 like within 1 month. Today, and it has gone down today by around 230. I mean, what's the price now? Anyway, but it went all the way to like 271. So that's like very volatile, meaning the prices, the degree of fluctuation was so high within a month that it went from like 219, 220 to like 270. But it went down a little bit again. But that's what they call volatility. That is the fluctuation. So sometimes the market is slow. That is, it's moving sideways. That is not really moving up and down. But sometimes it's actually going up. So the other term that we need to know, we have bid, ask, and spread. And then, anyway, as in, what do you understand by bid? It's up there, but you can use your own word to explain if somebody say bid.
Is the amount of people that are actually going for that stock at that particular day, at that particular moment, right?
Yeah, kind of. Any other person? As in base bid. Okay, so bid is the price that buyers are willing to pay. So if Tesla is selling for 270, when you log in there and you are ready to buy, if you tell them that you want to pay 270, that's your bid. Then the ask price is the price that the seller are willing to sell. So the seller will also tell you they want to sell for 271. So until when you are ready to pay 271, there will be no space.
Okay, yeah. I think I put the volume in terms in place of bid. Yeah, volume is the amount they put up for that day. Yeah.
Okay, volume is like that just the amount of the people that that are actually buying and selling is the volume. So the bid is the price people are willing to pay. The ask is the price the seller are willing to sell, and the spread is the difference between the two. So usually when you are buying outside of the market, meaning between 9:30 and 4 p.m., if you are buying a stock outside of that, the spread will be higher. That means the difference between the asking price and the selling price will usually be higher outside of the market. During the market, usually like 1 cent to 5 cents. So when you need to buy a stock outside of that time, it's advisable to use what we call limit. I will show as in very soon we will log in and look at what this thing means. So quickly I will log in to show what this means. So there's market order. Market order just meaning that you're willing to buy at the current price. Then there is a limit order. Limit order, you are actually telling them how much you want to pay. Is it clear?
Yes, sir. Yeah.
Okay. And after this, I will go to actually log into Robinhood and show a sample. But this is very important. As in limit order, you telling them how much you want to pay. Market order, you telling them just say to me whatever the price is now at the market. You do market order if you really want that stocks. That is whatever price they are selling it, I want it. Limit order, you are telling that this is the highest that I want to pay. And if you are selling to you, say this is the lowest that I want to sell. Then there is a stop order. Stop order is when this price get to, if you already own the stock and you're willing to sell, you tell them when this stock get to $70, sell me out. Oh, anyway, you already own the stocks. So you could put a stop order there that is, let's say it has gone to 77, but you're not sure if it's going to continue to go up or go down. So you can put a stop order. That's like a preventive measure. If this market goes down to 77 out, that is, I'm only willing to lose 7 out of the price now. But if you don't put this stop order there, the price can go all the way to 35 and you'll still be in the market. So stop order is like telling your broker when it reaches this point, as I want to be out of that stock or out of that company. Then there is trailing step order. So trailing is, let's say you buy a stock for $40. So you're not sure if it's going to go up or down, but you don't want to lose a lot. So you could tell your broker a trailing stop order is like 5%. So, or let's say 10%. So 10% of $40 will be $4. So you're saying once this price swing between 4, as anything 4 point something, they should sell you out. That's a way to get out of the stocks without losing so much. We will go in there to show us. Okay, we'll still have some more. There is also a fill and kill. So fill and kill is you either buy now or don't buy at all. As in you tell them I want to pay $30. If you cannot find $30 for this stuff for me, then don't forget it. Exactly.
Yes, sir.
Okay. So fill or kill, meaning fill as in buy it immediately. But if you cannot find the price, then just cancel it. Then there is day order. Day order is, this order is only good between 9:30 to 4 p.m. That is during the market. But good to cancel, you're telling them that you're willing to stay there for 90, usually 90 days. That is whenever the price comes to where, whenever the price move between your order, that if, let's say you have saw a store that is $40, you are ready to pay 39. You're telling them whenever that store go down to 39, buy. So you could tell them they order meaning for that day only, or you can tell them good to cancel, which is usually 90 days. All right, so now let's now go let's not go and log in to quickly actually put this, what's it called, in practice. Do we have any question?
No, sir.
Okay. So I'm just gonna log into Robinhood now. We'll run through those things quick. I'm just logging into. Bear with me. I'm trying to log in and show us share screen start. All right, we're able to see this one.
Yes.
Okay, so now, for example, I want to buy this gold. So I will say trade. Now, if you're using Robio, you can use it. If you're using Schwab, it's the same. No, you log in, you're ready to buy. So you go trade. So there's trade option, there is sell and buy. So let's say I want to buy now. I'll click buy. So if it's just market order, it's a number of shares. So I could put one there that say I just want to buy one share. But this is the market, this one, market price. But that's when you're doing what we call market order. But if you want to do limit order, you have to touch up here. So let's say I cancel that. I say I want to do limit. You touch up here and now pick this limit order. Limit order, you will tell them how much you want to actually pay. Continue. Okay, so I want to buy 2 shares, but this is the bid. Can you see the bid and the ask?
Yeah.
Okay, so bid. Somebody wants to buy for 17.57 and somebody wants to sell for 17.58. Now, if I'm willing to buy, if I want to buy now, I have to buy for 17.58. But if I don't want to pay that price, I can type in whatever I want to pay there, 17. Let's say I want to pay 17.56. But the meaning of that is that I cannot buy it now. I will only I can tell them that this order is only good for it's only good for 8 p.m. Or can you see the good this or good to cancel? Good to cancel, that's usually 3 months or 90 days. So I can say after 8 p.m. tomorrow, they should cancel it, or for the next 90 days, this one, the next 90 days, whenever the price come down to this within 90 days, they should go ahead and buy for me. But this time I'm not buying, I'm just showing us what we've been talking about. All right, so trade. Then if you want to sell it, you already have one share, you can press sell. And same thing, if you just want to sell at the market price, you press one share there and you sell. But if you want to tell them how much you want to sell, then you have to go up here and select limit. Limit meaning I'm gonna tell you how much. I'll tell them how much I want to pay. Is that understood? As in, are you following it?
Yes, sir.
Okay. All right, so you tell them how much. So lastly, let's go to trade and sell. So there is a stop order. Stop order is like if this thing start going and I'm not sure how far it's gonna go, I can tell them when it goes less than $16, that is, I'm only willing to lose $1.57. Stop order will tell them to sell me out at 16. That is, I'm only willing to lose $1. Stop limit order, you actually tell them the exact price. Then the trailing order, you could use an exact price or a percentage. You could tell them if the price move between 5% to sell you out. All right, that will be all for today. Let's stop. All right. Okay, that will be all for today. Do we have any question? Any question based on what we've done?
Based on just a quick question regarding to the gold. I'm looking at it real quick. I went to PB's. I looked at the one you just shared on that. Just shared
Okay.
the. I looked at it based on Tima said the criteria of buying based on the background. Got the everything seems to be green. The ROI is 5.70%. The income is 1.63 billion. The sales 12 billion. So would you recommend based on? But the only thing is that it's underneath the 200-day moving average. So if you have to make a decision, a buying decision, will it be a good thing to buy right now, or you will still wait for the 200-day moving average to be above, to no, so the price to be above the
We're
200?
talking about the gold we just look at.
Yes, that's what I'm talking about. The one you just showed up. Would it be your own specification of buying if you're going to buy something right now on this analysis, or you're going to still wait, or you don't even going to touch it?
All right, let's quickly do this again. So All right, Finvi, so we have gold. GOL. GLD. All right, so if I want to determine or decide if I'm buying this gold or not, I will come here first. Is that what you're talking about, sir?
Yes. Yes.
All right, so based on this chart, this price, the highest it has been is around 21 point something. But now, for whatever reason, it has gone down. So it's now under 200 days, but it's picking up. Yeah, okay. So based on this price action, it may not be a good time to buy today based on the last thing here, based on this. This shows that the people that more people said or sold today than those that are buying. So tomorrow is likely to go down. It's not 100% guarantee, but this price action says or shows is likely to go down tomorrow. So we can wait till tomorrow to see what happens to buy. Or I can buy it if I already know the history of this company. If I knew the reason why they are where they are now, I can buy irregardless of this price action. If I know the history, meaning they are good company and the sector, I mean the sector they belong to. When I say sector, I mean all the people, all the company in this sector, they are all below 200. So likely in the future, that sector can start going up. So that's how I would decide if I'm to buy or not. Is that good enough or
One more question. One more question. How do you find out whether he's the leader? How do you find out the leader in the industry? Because
the
that
leader
just
in
that
this the leader in this
yes,
sector?
in this sector, yes.
All right, so now on over here, sure. This is okay, over here it shows you all the peers, that means all the other complaints that so you will not touch each one of them and decide how well they are doing. That's how you're gonna pick the leader. So the leader could be based on market capitalization. So in this case, this one is 30 billion. So if you touch each one of them, so if you have one that is 100 billion, then that means they are bigger. And you look at this PE, the price/E ratio. This is 18.95, and in the future, they will be trading at 9.6. So all of this will tell you if they are leading or not. So for example, let's touch one of them, one of these AU. So Anglo Gold. Now you see that this one too is also trading under the 200 days.
Yeah.
Okay, so if most of them, all of them are doing this, then you know that sector, this is how they are all doing. There is nothing wrong with one company. It's just that this sector is down for now. So you could go with whichever company that you want out of them. Since that most of them are doing that, they are all trading under 200 days. So let's look at the market. Market capitalization. So this one is only 10 billion. So meaning the first one we look at, that's 30 billion. then we will say that those one they are doing better than this, and their PE. The other one was like 18. This one is 303. What does that tell you if you are comparing these two? If you are
Say that
comparing
again.
and the other
If
one.
yes, if I'm comparing this, it seems as if this gold is better. Is it gold? Let me hold on a
No,
second.
the other one is better. This one
Yeah, the
tells
other one.
you every $300 you spend, you're only gonna make $1. That's the meaning of this 303.
Oh,
Every 303.8 you spend on this company, they will only make $1. The other one, every $18 you spend, you will achieve $1 profit. So the other company is better.
yeah.
As in that's the meaning of this PE. Every $303.80 we spend, this company can only make profit of $1. The other one, every $18 will make us $1. So the other company is doing better than them. If we're going with this PE.
Yeah. The one
Oh,
more thing that
okay,
sorry,
go ahead.
the one more thing that I noticed is this:
Yeah.
they just got downgraded, but the other one was upgraded.
Okay, so
So the
these people,
gold was downgraded,
they got, is it
downgraded.
one that got downgraded or the other, huh?
No, gold got downgraded with all these things. Gold got downgraded to neutral, but the other one got uh, upgraded. AU got upgraded from the analyst
Okay.
to
Yeah,
sector
but this is
sector perform.
sorry. Oh, okay, this is gold. The other one, AU. Yeah, so
Yes.
upgraded meaning that's the expectation of the analyst, the person that is analyzing this company.
Okay.
So by downgraded, you will also look at which day. Okay, yeah, like 2 days ago. All right. So but when they downgraded, it said outperform from neutral. So we could look at the price. CIBC. Yeah, that's a good point. As in one can look at what the analysis are saying, but we will still compare. As in you will look at more than one factors. So this is at 17. But the meaning of this is every $19 or $18.95 that you spend, this company will produce a profit of $1. As in you will compare everything the analysts are saying, but we still need to look at which company is more is like valuable. This one
Okay.
every $19 will make a profit, but the other one you have to spend $303 to achieve $1. So we will compare all of that to make our decision.
Okay. I think that even with the analysis of the gold seems to even be better because of all this other things. So
Okay.
it might be a good time to start buying. I'm just to consider buying it.
Yeah.
So,
Yeah, so but as in the analysis, it takes as in you're gonna look at one factors, but at the end of the day you make your decision. But this is
yeah.
saying they are trading as this in the future, there will be the forward is 9.65, but the other one is at 303, but the future is actually 6. So in the future, the other company could be doing better.
Okay.
All right. So, but at the end of the day, you still have to be the one that will make that decision after you consider all of the factors.
Yeah. Thank you so much, sir.
Oh, thank God. Okay, I'm gonna stop the recording, then we'll just talk.
Okay, sounds good.